Hey everybody, Justin Udy here, Justin Udy and Team Real Estate. I am here at our headquarters talking to you about the market in general. And one of the biggest questions we've received is, what is the interest rate and how is it affecting my home value? Let's talk about it so that we can understand how it's affecting you and what you should expect in the future. So with interest rates, there's a couple things I want you to think about. When I began this business, I started out in the mortgage industry. And one of the things that I remember when I was working at Frontline Financial with Tyler Jack over there, I remember him saying one thing to me when he walked out of his door and the rates dropped below 7% and they said, it's a refi boom. And I remember because rates had never gone that low. And so in being in the mortgage industry, being in the real estate industry, I will tell you that the interest rates of the market, the terms of the market are just as valuable as the price. Imagine this scenario, and we've posed this scenario before. Would you rather buy $1 million home and have a 1% interest rate, or would you rather buy a $100,000 home and have a 10% interest rate? Truth be told is the payment is exactly the same. So if you're gonna end up with the lottery and you're gonna be able to pay it off, sure, you're gonna take the lower amount. If you're gonna end up saying, I just wanna have $1 million home at a low payment, you're gonna take the bigger one. But again, the terms are just as valuable as the price. We do that all the time in the things that we purchase, whether we're picking out, the type of soda we want or the car we want. We want to look at what are the amenities and what are the terms to see if it makes sense. So as we see values adjust and we see the terms of the market, we start seeing this equilibrium when we're choosing what to purchase. So I want you to look at the details of what a changing market is doing to homes in the market and affordability. What you can see is as the rates go up and as the payment adjusts, you're seeing that on this, you can see the adjustment in price. So for example, if I had purchased a home back in January of 2022, where rates were closer to 3%, but then I'm looking and I happen to find a property when rates happen to go over 6%, you can see the difference in the adjustment in the pricing where they are the same. And in some of those scenarios, depending on where you're at and what price point, it can be $25,000, $50,000, $75,000 difference between the affordability and the rate. Why do I tell you this? Story for you on a property that we had listed. Property was previously listed with a limited service agent or limited service brokerage. They could not sell the property. Priced it too high, adjust. There was some marketing issues with it. We ended up taking the property after they had it expired off the market. We took the property on. We did the marketing things that need to happen. We received 8 offers within the first 10 days. Okay, this again, take into account strong market, no offers, not selling, and then we ended up getting 8 offers. That weekend is when we had a very large rate adjustment. Out of those 8 buyers, 4 of them called in saying, I'm so sorry, we no longer can afford the home. Meaning the interest rate adjustment meant that no longer were they in the market. In fact, they were out of the market. They were no longer a buyer. So you had 4 qualified buyers and 4 unqualified buyers. Now that shouldn't scare you. All it means is that you have 4 amazing buyers for your home, but 4 have now been eliminated. So what does that do to the value of your home? What does that do for future pacing? We just have to make sure that we follow the basics. 1, we want to make sure we price that property correctly. 2, we want to make sure the condition and showability of that property is there. And then 3, we want to make sure the marketing is in place so that it's attracting the right people that are qualified to purchase that home. They have the ability to make sure they can get to closing. So how does the market affect us? It does affect us. When the rates go up, it does affect the affordability and the amount of buyers that can purchase it. But at the end of the day, real estate is where a buyer and a seller meet. So if we can make that accommodating, if we can make that attractive, if we can make it compelling, we will bring a market. Sometimes we forget this item of like, man, I don't know what to do in a changing market. The property you sell in is the property you buy in. The market's up 20 grand, the property you buy is up 20 grand. The market's down 30 grand, then the property you're buying is typically down 30 grand also. So just consider as you're making a move, a lateral move, or even getting into your first property, it is better to own a home and if you're gonna buy and sell real estate, right? This is always the rule. Buy real estate and wait, but don't wait to buy real estate. Things are always changing, things will always adjust. Typically, if you're gonna hold it long-term, you're not gonna have the issue. The average person is owning a home about 7 years. So as you see these market cycles, if you have questions, you're not sure what to do, call us. Let me give you the information, not only the data, what we're seeing on the market, and the best steps so that you can navigate as in any changing market. Looking forward to talking to you soon. Thanks.